Hello everyone, this is George DeSantis with the look at the market for the week ending November 6th, 2015. We'll start the look at the market as we usually do by taking a look at the monthly chart of the S&P 500. As we look at the chart, we'll see these three bars, August, September, and October. The three of them comprise what is called a bullish morning star formation. A bearish bar in August, an inside bar in September, and a pretty bullish bar in October, where it closed near the high of that bar. Now, so far this month, we've only had a few trading days, weeks of trading days, and we are close to hitting this parabolic, the yellow dot, the parabolic stop and reverse indicator. If and when it does, it will simply indicate that this trend, this downtrend we had for the last 2 or 3 months is over and that the trend is now turning back up. If we look at MACD, MACD is indicating that the bears are losing strength here because the histogram bars are getting shorter and shorter, at least for the three of them here. If we look at the bottom of the chart, we find that Elder Force index is now above the zero line once more, indicating that the trend is up and supporting that interpretation up here. So we'll take a look at the weekly chart next of the S&P 500. So as we look at the weekly chart of the S&P 500, just to recap, we find that since we had this double bottom and a hammer, we've had some very bullish bars. We even had a gap, so one gap here, a gap up. We had another gap up here, and finally this past week we had another gap up, a gap between the close and the open of this bar. So in addition, we can see that this steep incline of the Kalman filter as it crosses above the instantaneous trend line suggests that there is a lot of momentum and strength to this uptrend. The parabolic stop and reverse indicator, this yellow dot, was hit by this bar, and subsequently the parabolic stop and reverse indicator, the yellow dot, moved to a position below the most recent price bar. When we look at RSI 12, it is sitting just below the 60% line, and that's pretty bullish because once it crossed above the 50% line, it confirmed this uptrend. Now, the MACD histogram, it continues to trend up. It is now at 11.24 above the zero line, and so that's now in bullish territory. At the bottom of the chart, Williams percent R crossed above the 50% line, the 50% line, and has now crossed above the 80% line. This is telling us that momentum is pretty strong, and for this uptrend, we can see that as we look at the price bars, we can see that that's an indication of how strong that uptrend is. So all in all, the monthly chart looks as though it's turning around. The weekly chart certainly is continuing to trend up, although it's approaching some resistance levels at the top of the chart here. And so let's take a look now at the daily chart. And now we'll examine the daily chart of the S&P 500. Notice that since the Kalman filter crossed above the instantaneous trend line here, back in early October, we've had a nice uptrend with price bars and the Kalman filter remaining above the instantaneous trend line. Last week I put the Fibonacci extensions on, and when we look at the extensions from this high to this low, we came up with the 1.272 extensions at this level and the 1.618 Fibonacci extension at the 2117 level. Interesting to note that on Tuesday, this bar, the high of Tuesday's bar, hit the Fibonacci 1.618 extension, and we've had a little bit of a pullback on Wednesday, Thursday, and Friday. On Friday, we had a little bit of a hammer here. There's a hammer. So we might anticipate that we resume this uptrend from here. There's also the likelihood that because we hit the parabolic stop and reverse bar here, we might see this market come back to test the instantaneous trend line, the blue line. So we wait to see how this will play out. However, even if we come back to test the instantaneous trend line, because of the previous strength of this uptrend, my position would be that this is not going to be violated. The instantaneous trend line should hold as support, even if we got down to this level. Now let's look at the Jerry Appel's sum of the rate of change indicator. Since it crossed above the 4% line here, we had a signal, a buy signal, and it's been on that buy signal. There is no sell signal yet. When we look at MACD, since we had this big bullish divergence of MACD from price, we've had this nice uptrend. And although MACD is beginning to lose some strength here, you can see the histogram shortening up. There is no bearish divergence of MACD, and it's not unusual to see MACD shorten up like this during an uptrend. So we'll wait to see if there is any more deterioration in MACD as we go along. Now, at the bottom of the chart, we have Williams percent hour, and since it crossed above the 50% line, we've had this uptrend begin, and now we're above the 80% line, which tells us momentum is even stronger than it has been at about this level here. So much for the daily chart. So in summary, the S&P, the monthly chart looks as though it's turning around. The weekly chart is definitely in an uptrend, continuing an uptrend. And the daily chart is also in an uptrend, even though we are getting a bit of a pullback here perhaps. So let's look at the weekly chart of the NASDAQ next. So on the weekly chart of the NASDAQ composite, we find that it has a very similar structure to that of the weekly chart of the S&P 500. We had a hammer here, and we've had some gaps up here. We can see those gaps, 1, 2, 3, similar to the S&P. The Kalman filter has crossed above the instantaneous trend line, signaling an uptrend, and the parabolic is now below the most recent price bar. So the weekly chart of the NASDAQ is also looking very bullish as the S&P chart looked. Now on the RSI 12 indicator, we just had a crossover the 60% line, and I highlighted it here with an ellipse, a blue ellipse. The RSI is now at 61.11, so it's slightly above the 60% line. However, that usually confirms a very nice move to an upside, and it's an uptrend. Now at the bottom of the chart, MACD was trending up from below the zero line, and more recently it crossed above the zero line. So we do have MACD now in bullish territory. So NASDAQ's weekly chart is looking very similar to the S&P 500. Let's take a look at the daily chart of the NASDAQ composite. On the daily chart of the NASDAQ composite, we see that we've crossed above the Kalman filter crossed above the instantaneous trend line here, similar to the daily chart of the S&P. And since then, we've had this nice uptrend. One thing we should note is that just as we had this narrowing of the Bollinger Bands, the upper and lower Bollinger Bands, once again, we seem to be having a narrowing of the upper and lower Bollinger Bands. Recall that the Bollinger Bands simply represent 2 standard deviations above the mean price of the NASDAQ composite, and the lower band represents 2 standard deviations of variability below the mean price. Okay, so now we do see that the narrowing has occurred again, suggesting that perhaps we might find another nice move up, possibly even a move down, because the Bollinger Bands, when they begin to squeeze together, they don't tell us anything about the direction of the move. They tell us that there is a nice move coming. Okay, so we can take a look at the MACD below here, MACD histogram, and even though MACD is weakening, as we saw also with the S&P 500, it's still in bullish territory. So there's nothing to be concerned about here yet. So at the bottom of the chart, we have Jerry Appel's sum of the rate of change indicator. And this was a buy signal here to enter, to buy the NASDAQ composite, whether you use the Qs or some other ETF. And for now, we still have the sum of the rate of change indicator above the 4% line. So this all represents a nice bullish trend in place. That's it for the week of the market, for the look of the market this week. I hope you have a good week and make some walking around money.